Hello, good afternoon, everyone, and good morning, wherever you are in the world. And welcome to the Wavy Tunnel Market Outlook for the um, beginning of the week, 20th of July, 2026. I'm still out and about on my travels, so before we go, let's have a quick look at the disclaimer that the presentation is for educational purposes only. Past performance does not equal future results. If you just complete reading that, and then we can crack on with what we might be able to expect for this week. So let's just go and have a look here. As you know, Friday, a little bit of a sell-off. It's been attributed to a chip sell-off, and oil prices obviously gained because of the escalation in um, the Middle East. And then the figures that have been coming out have been a little bit mixed. So, what's on the agenda for the week? So, nothing too interesting from um, an economic perspective for the beginning of the week. You can see all through the week, there's not too much to get too excited about. Um, and maybe on Friday, just after the um, market open, we can get the S&P Composite um, index numbers that might liven things up a little bit. As we go into the following week, though, that might get a little bit more exciting as we go into month end and then non-farm payrolls, etc. On an earnings perspective, this might be the catalyst that we're looking for to see if there's any major companies that are going to be releasing, and yes, they are. So Tesla, Alphabet, you can see a whole slew of these names now that are going to be reporting now after we got bank earnings, which were, knocking them out the park again with their trading revenues. So let's have a look and see how the companies are navigating these little um, turbulences that we are experiencing in the markets. So let's start with the euro. I'm on a 4-hour chart, and there doesn't look to be too much excitement. I mean, even if I go into a daily chart, I can see that the ranges are, not too aggressive. On the daily, we can see we are looking for direction, pulling back into the wave. Are we going to get a fill the gap trade? Are we going to get something a little bit more meaningful? Bungees are also undecided. Are we going to have a pullback down to the trend line and maybe the higher time frame tunnel, or are we going to continue drifting higher? And that's what I can see there. If we looked at this in perspective of the move that we've had um, all the way down, what I'm going to do is I'm going to measure that first impulse, because the way that I look at Elliott wave is basically on the awesome oscillator crossover. So this hasn't crossed over yet, so this is still and could potentially head lower down to this target area here. Um, so on that first impulse, we had that into that zone that we really like, these three numbers here, and this remains our target. We're currently in the middle of the wave, and so, like I said, look at this area here above 115.65, or look at this area down here at 112.60 for, a little bit more of a confirmation. This one looks flaggy in its setup. you know Put a trend line on there to see if there's a break. Again, the 4 hour in the tunnel, and we can see that this one could go either way, back down to 1370, or we try and break above, um, back above this trend line, which will be a break of this trend line, which would probably take us to, let's get a target. There we go. There we go. 115.10.20 area, which then coincides with this area here. There we go. So you can see how all these numbers play into each other all the time. If you spend long enough in your charts and you get it all mapped out. And similarly on the bungees here, they are looking for which way. Does this roll over and continue higher? Does this continue lower, break to 50? Does this come back up for a snapback? So Monday will tell us all of these things, and you can see what happened on Friday. They're really looking for some clear direction. At the moment, it does favor buying the dips on these, for weaker dollar. But I think as data starting to come out, we need to watch this a little bit more closely because the dollar might be giving us one or two surprises. So that's the euro. Sterling, there's a change of government on Monday. Not government, let me rephrase that. Change of leadership. Starmer's gone, and there's a new chap at the helm now that is the new leader of the Labour Party, so people will be waiting to see what his policies indicate. But like the euro, this again, flaggy, impulse up, looking for a breakout, possibly higher. Same type of setup you can see on bungees and on where they need to sort of make a decision. Are we going to continue higher? Are we going to have a look at a pull back into this zone here? So it looks like sterling is going to be, here's your support area. There it is. And I'm going to suggest that that is about a 38.2% retracement value, and it's looking at this move here. 38.2. Yeah. Targets up here above 135.25. So these are the area. That's the first area that will talk to us. Watch this trend line for potential break. You can see we're getting congested in here. I could probably make that a little bit closer as well. So this is going to break out. So we either come back down to this low area here, 134.25. You can see that as well. Previous area. You can see all the fighting that happened here. Even if I go all the way back across to the left-hand side of the chart, and I start drawing a line across, you can see how it's going to coincide with that. You can see how this area becomes important now. So 134.25. Break above here 134.80, and we could challenge our target area up here. It's difficult to have a bias at the moment. I'm struggling, and because I don't watch it 24/7, I've lost a little bit of a feel. So I'm just going to show you, what I'm seeing on the charts. This looks like a deeper correction for the Canadian dollar. What I'm going to do here is, let's measure this area here. So we could get a deeper pullback into this 50% on the Canadian dollar down here, just above the 139 area. But you can see this was a previous area of resistance, which will now turn into support because that was that break there. What I would watch this level here is I would be measuring this area here, that area there, because if we break that, what I would be doing with this is for a measured move, I'm just going to try and grab hold of it and move it down here, bang, and there, that's that lovely number we like again, 707. So 137.76. So in the Canadian dollar, watch this area here, this around that 139.80, 140 area. A break and close below that area, we will obviously target the higher time frame tunnel, and then obviously a measured move will take us down to 137.67. Let's see what the indicators are telling us on here, and they might be looking for a slight bounce, but I would watch this area pulling back here. Wave is coming through the tunnel, so here is, if you think like what I'm thinking, and a break and a move to that measured move, you see I can pull that across there. I started at the left hand side, it's pulled through all these levels, and where does it meet? Here, where the wave's crossing through the tunnel. I mean, all these things keep repeating themselves, so you'll get to recognize them. And whether you put, I always recommend putting these on your chart because they're great, because you know now if you're above this line, you test in that level there. If you're below this line, you test in that level there. And you know, we've got the measured move down there, so lots to go for on that. Dollar yen, you can see nothing, waiting. You've always got to be when they say that analogy, a vulture is a patient bird. This is, if you trade this one, you've got to be patient, and that's why I always go into the cross and have a look and see how that's performing. And it's not showing us too much more as well. The decision and the catalyst for this will be anything that happens in the yen. You know, what's going to happen with the diplomatic efforts in the Middle East, goodness only knows. You know, I think everyone thought we had a deal. It looks like it wasn't. There's a lot of earnings coming out this week. There's a lot of pressure on central banks and people trying to manage and navigate these inflation waters and what they should do with monetary policy. So there's so much, and this is why you're getting this indecision in the markets. So that's the FX. Let us go on to the futures, and let's start with the Nasdaq. So these are the boxes I drew last week, and there we go, they've held. So we had these boxes on last week. We can see now this is that drift down that we had. Lots of spiky, there was option expiry on Friday, hence the volatility in here. Massive push down, that clear out down here, but look, then a massive wick. So this box is valid. So this is your crucial support area in the Nasdaq. And you can see, yeah, this is going to be a good example of how you look at Fibonacci and each impulse. You see this impulse here, so there's the crossover, so I'm measuring that to there. We had the first impulse lower, we got a 61%, 61.8% retracement. There's our target area, 28,979. Bang on. Right, let's go to the next one. And this is why, do this. Stay in your charts. Look at this. Yes, this one you had to wait a little bit longer, but you got your target on Friday. So you had that move. We never broke above the high there. Look at that. That was a perfect. I always love these because what you can do with these is your risk reward is so small. So you sell this. Your stop is above, a close above there, because that takes you out because it's above that high there. Yes, there's an argument, and there was your target, but yes, there's an argument that you're now measuring the bigger move, which then would give you, but I'm looking at the individual impulses and measuring those. I don't measure the full move until I break a trend line. There I broke a trend line, so now I would measure. Now this is the move I'm looking at now. That would have been great because you would have made some money on that one. Here's your V in here. There's your gap in there, but I see that was filled on the wick and that was filled again. The retracement of this whole move got back into our magic zone again, and there was our target. So we've got a trend line there. It's drawn. Wavy tunnel is drawn for you. So this fib stays on until that trend line is broken. If that trend line gets broken, all we're going to do is extend this to there, and now we've got a new set of numbers. Alternatively, you can do this as well. You're looking at the individual move. This is going to tell you something different. Let me just change the template for you. So retracement, apply, there we go. So now we can see on our move here, which is 1, 2, there we go. Hang on, let me start again. 1, 2, 3 for 1. Then that becomes 1, 2, 3 for 2. So are we going to get one more push lower? So how do I manage that? So what I would be looking at, I'd look at looking for divergence. So between that low and this low, what happened? Divergence. Great. What did we get? We got that move back into our zone here. Great. That set you up for another trade. What have we got now between these two lows and this one? No divergence. It doesn't mean we're going to get another one lower, but it favors another look at this low to see if we can break this. We might get divergence internally. When I mean internally, within this structure here, but you can measure it against there. So if we get aggressive move Monday, Tuesday, we break this low and the awesome oscillator rolls below here, then we're going to continue. We should continue lower. But if we get a new low or a retest of the low, and we don't have another low on the awesome oscillator, we'll have lots of, and then we'd be looking for a deeper correction. And we've already marked this out on the chart. This is our target down here, which is at 27,809, and we could get a deeper retracement into, pull back 50% into the tunnel again, so that fill the gap trade there. I'm looking at this impulse here. This impulse here has a slightly higher target, which is, but this is just measuring this impulse here, and that's why I put the fib on there. You can see on Friday, so I got in very late Friday and I saw this move and it was a 38.2, and I like it when it's aggressive to sell this. So I didn't trade all week, and I just traded on Friday and took this trade here. And bang. Closed it and said, thank you very much, turned off my computer. So these are some of the areas that you watch. This is how you can assist yourself with the wavy tunnel by putting fibs on, identifying price action, looking for your retracement, and framing out your areas of support and resistance using price action, etc., etc. You've got all of these elements within your education pack. So before we jump onto the others, let's go and have a look and see what they say about what are the options saying. And again, you can see how lovely these levels work out for you. You can see how it consolidates. You can see the break came back, had a look, never closed back inside. So now you know that this is your area of resistance. Same thing, stuttered and stalled, always comes back for another look, not ready to go through, down we come, etc., etc. Here you've got a big wick, here you've got a wick. So you can see that this whole area down here is going to be strong until we start closing below this area here, 28,400. Right. S&P is the same, so we'll look at this before we go into the S&P chart, and you can see a little bit cleaner, a little bit better. But what's happening? Came into the zone where all the demand was, broke through that where all the support was, And now you've got your clear levels. You can see that. It's all mapped out for you. Great. Love this chart. So let's go to the S&P, and there it is. And again, everything as we laid out last week is there. So a similar pattern. And you get to practice now and go and put all your fibs on these things. Go and have a look at your areas. Go and mark out your chart. You've got the wavy tunnel. You've got the tunnel. You've got the awesome oscillator. You're looking for divergences. You're looking to see what the bungees are going to be doing. You're going to mark out your chart. And here you've got all your levels. And be patient. Oil, boom. We've always marked out this chart. This, I was a little surprised we got a little bit lower, but the market always gets excited. And you see that excitement here. And you can see if I extended this box across there, where does it come into? That there. So you can see the areas. So now your massive pivot is 86 area. So you've got 66, 86, above 86, you go back to 100. Otherwise, we stay in here. If we get peace in our time, I wouldn't be surprised if we slip back into the 50, 60 area. But for now, difficult to trade this as well. Difficult to trade because the market is believing that this is really not going to blow up. Hence, are you seeing this? There's no dramatic moves. It's just a grind with all the trouble that's going on. The volatility index is not shooting higher. It's gone a little bit higher. It's gone from 16 to 18. Whoopee. Not. I still feel there's got to be a clear out somewhere, but I'm trying to not get my personal biases come into this. So gold again. We saw it's coming to the same area. It's coming to the same area. So unless we get below 39.50, we stay 39.50, 4,400. Simple. Above 4,400, back here. Use the wave, the tunnel to guide you. Use your awesome oscillator to look for areas of divergence. Look at this. When it came in here, what did we have? Divergence. And we had a box that we had drawn in here for support. Yes, you might have to be a little bit patient. This is a 4-hour chart. But it works. You know, bring it onto the hourly. You can see, obviously, then the range is a little bit bigger, but it's all still the same. It's all still the same. So I hope that all helps. You can speak to Jody on Monday in your live session. I hope all goes well. I hope you all stay safe and good luck with your trading. Until next week, take care. Bye.